Hello, ladies and gentlemen. Welcome to the CoinGeek Weekly Livestream, brought to you at 2 p.m. Eastern Standard, per typical, but 12 p.m. Mountain Time is where I am. And it's funny, you wouldn't think that 2 hours a change feels like that much, but I got up at like 5:45 this morning. It's been one of those days. So shout out from Boulder, Colorado. I am doing quite well. I have acclimated to the air pressure and everything else. We did try to go for a walk and was shocked. My typical 10,000 steps a day. About 15 minutes into my walk, I was feeling it. So what they say is true. The thin mountain air is a little less satiating until you have fully acclimated. So. For everybody watching, I would really appreciate it if you'd like, subscribe, hit the alert bell, and please fill the box with your questions, because we have a really tremendous opportunity today to talk to one of the key people who actually preceded the Silicon Valley boom by quite a bit. He's been something of a critic while also integrating and helping define the way that tech startup and venture capital has worked for the last really 30 years. So we have Brad Feld will be on in probably 5 or 6 minutes here. And I would encourage you, if you have questions specifically about entrepreneurship or tech entrepreneurship, but also the culture. I think the culture is a really important thing that Brad gets really right. There's lots of people who have been big tech venture capitalists and have done a lot of interesting things, but you do a little digging and how they live their lives and some of the second and third order effects of their success. And there's stuff worth criticizing or stuff worth improving on, is probably the best way to put it. And Brad's one of those people thinking about those second and third order effects. I'm really, really honored and excited to be talking to him in a few minutes. And I hope you'll bring your questions. So, I also want to thank our sponsors. Our sponsors today are Rock Wallet. Per usual. So thank you to Rock Wallet for consistently sponsoring the CoinGeek Weekly live stream. That is the single best non-custodial Bitcoin wallet, giving you access to BTC, Bitcoin Cash, and BSV, as well as various stable coins and Ethereum and a couple of other things. And then you have a custodial exchanging system built right into the wallet for your convenience. I also want to thank the people who brought me out on this trip, at least in part, helping us along the way. The folks from Otherworldly TCG and Brainrot Games. They are some of the people that are taking the blockchain opportunity, the Bitcoin opportunity, and really giving it to people in a way that they can understand, that it is not just some digital asset out in the ether that you can invest in, but also that it has real world use in the real game, and not just because you're a blockchain person, not some novelty token that you can carry around and say, I don't know, I own this and I'm some part of an ethereal, elusive club, but actual plugging into the game, like the ownership of these items is part of. It's fully integrated into the experience, and I'm really pumped to have a relationship with those people. It's the same people that are hosting the event tonight in about 6 hours to do a book signing and a whole bunch of stuff with Brad. So really good stuff. Thank you to them. The comment of the day. Now, this is going to be a little different. You normally get cards from the Otherworldly TCG folks, but the comment of the day today will receive a signed copy of Brad's new book. So make sure your comments are valuable. And if they are valuable, we think that you will be very happy. We can get it autographed to you. So if you win, send a DM to the Real CoinGeek account on X. And we'll figure out the details, and we'll get you a nice signed copy of Give First by Brad Feld. So without further ado, let's run the ad, and we will be back with Brad Feld. Welcome to the show, sir.
Hello, Kurt. Hello, whoever's listening.
It's good to have you. So let's, for anybody who doesn't know, and I think of you as a famous venture capitalist, but I'm one of those people that reads books by venture capitalists when they come out. I've been an entrepreneur for a long time. So my audience is very blockchain centric, but our audience is also a little bit critical of the typical blockchain ethos, get rich quick. Hey, I bought the right thing and now I get to drive a Lamborghini. And so I think that's why we have quite a synergy is you're a little bit of an unorthodox thinker in that space, in that you've made plenty of money, just like lots of other folks, and you've been involved in lots of big startup names that have become huge exits and all of that. But you also, you have a, I don't know if altruistic is exactly the right word for it, but you have this look about the second and third order effects of building a good business, essentially, in that it brings the culture a direction that we can be proud of. So Brad, if you could distill your, rather than me talking about Techstars and Foundry, and I'm sure lots of people have introduced you on stage with a boilerplate thing. How would you like to introduce yourself to the universe of people who may not know precisely who you are?
I'm not going to get a soundbite intro from you that I can share with my mom that'll make her happy. Well, I've kind of been on a long arc for a number of years. I'm about to turn 60. I started my first company in college, so I was 19. I sold that company when I was 28. So I had a relatively early exit and generated meaningful, personal wealth at that point relative to being 28 years old. I then took almost all of that money and over a 3-year period invested as an angel investor in 40 companies between 1994 and 1996, which is how I learned how to be an investor. I knew nothing about doing anything investment related. My timing was good. It was the beginning of the rise of the internet bubble. So I ended up having a bunch of sort of early success with that. And then I accidentally ended up becoming a venture capitalist. I never planned to be a VC. In fact, my wife, Amy Batchelor, likes to say, remind me when I was running my first company, how I would, occasionally give a guest talk here or there. I lived in Boston at the time, where I basically said, stay away from VCs. Another irony of that time period was I had my first company. We had a bunch of Boston area VCs as clients of ours in the late 80s, early 90s. We wrote software for portfolio management that today we think about it as things like Carta or AngelList,
sure,
that they could use to manage their portfolios. But I ended up ending up co-founding a fund with a small group of folks that was affiliated with SoftBank. SoftBank was our sponsor. This was back when nobody really knew who SoftBank was. Had an incredible ride up on the internet bubble, and then just got absolutely obliterated on the ride down. I'd also co-founded a couple of companies, several that exited before the internet bubble crashed. Probably my biggest failure on a dollar basis, but also emotional, was a company I co-founded that went public in 1999, peaked at about a $3 billion valuation, and then went bankrupt in 2002. So like just this amazing experience of incredible rapid growth and failure subsequent. I ended up starting another venture capital firm in 2007 called Foundry Group. And I also co-founded Techstars in 2006. I also committed to run the funds that I was part of, which changed its name eventually to Mobius Venture Capital from SoftBank Technology Ventures was her name. I committed to run that through end of life. We closed those funds down in 2023. So any VC that tells you a venture fund is 10 years long is full of shit. And along the way, I made a lot of angel investments with my own money. I started writing books. I started writing a blog in 2004. So I was writing kind of daily about a bunch of different topics. Maybe we'll talk about some of them. And subsequently wrote a number of books. And it was very visible for a long time publicly. I lived in Colorado. I didn't ever live in the Bay Area, although I spent a lot of time in the Bay Area.
Sure.
I also had 12 years living in Boston, where I went to school and then started that first company. So I had a network that was across the US. And as a result of having that kind of a network. I never bought into the idea that the place to build a company was the Bay Area. It's an amazing place to build a company. It's the only place to build a company. It's an amazing place to build a company.
Yeah.
But you know, I had this assertion for a long time that you could start companies anywhere in the world, which I think today has been, you know, both validated and is now part of the ethos. But certainly, even as late as 15 years ago, people were still saying, "Well, if you're serious about building a tech company, you got to come to the Bay Area."
Right.
Maybe I'll end the intro with as I wander up to what Amy and I call the third of life, which we have embraced that we're in. So, you know, turning 60. I don't subscribe to the I want to live to ever category. I've read enough science fiction, and I just really don't want to be 300 years old. And I think I'll be fucking done and tired of human beings by the time I hit 90, maybe 95. I don't know.
Sure.
And so part of that, you know, for me has been through this time period, really thinking intentionally about how I want to live. And I said this out loud to somebody the other day, and then I thought about it, sort of did a gut check to see if I agreed with it. And I do, which is today I like a lot of things. There are many, many things I like, people that I like, but I really only love 4 things. One is spending time with Amy. The second is reading. The third is writing. And the fourth is running. And like when I think about whatever I'm doing, I'm now trying to make sure that somehow those things are incorporated into the structure of what I'm doing, and I'm getting a meaningful amount of my energy against those. We can go deeper on some of it philosophically, but I think one of the things that has been important to me, especially in this moment in mid-2025, is I think that a lot of people lose sight of, or a lot of our species lose sight of what you individually care about. One individually cares about, not the species.
Sure.
And end up spending too much of our finite time on this planet trying to contort ourselves in ways to work in the context of what other people want versus understanding oneself. And hopefully what you want is a force of good, not a force of bad. But then putting your life energy against that. And that's been, you know, it's not been obvious or easy for me over the last 60 years, but it's something I think I would encourage everybody to step back and think a little harder about. And maybe I'll end with, while money is a tool to helping people accomplish that, it's not the thing. I mean, you know, the number of very wealthy, unhappy people in the world are legendary.
Yeah, no, indeed.
Going on since the beginning of time.
Sure.
So for me, I really just wanted to get to that place.
Lots of really good stuff to unpack there. So I'm hearing a 3-part aspect to your success. Now you've said place didn't really matter, at least for you. And I think that's true. I think there are incredible businesses that show up out of places that are unexpected, but then you obviously have your hot spots, your New York, Austin, Silicon Valley area. But I think there's also an aspect to it, timing, and you mentioned, hey, 1999, your business is worth $3 billion, and 2 years later it's bankrupt. And some of that you can control, and other parts of it you can. And it's one of those things where when you look at success and successful people, it's a lot like, okay, maybe they got lucky, or maybe they just positioned themselves really well geographically, or maybe you didn't. But geography can matter. But then timing also really matters. But I love what you said about the mindset aspect of the things you love. I think one of the things that really stands out about people who are very successful is that they do have a tendency to have a few simple things that they really love. And it's usually family in some regard. For you, it sounds like your wife. But for others, it might be, they love, their neighborhood community, or, they have a passion for something close to them. But then also that love of knowledge. So you like to read and write. So that's, I think rooted in a passion to learn. Like you want to experience the unknown and make it something that you know. And so I'm curious, how much do you think if you were to start to remove any of those ingredients, like a Jenga tower, at what point do you start to become unsuccessful if you take away like, I never really loved a woman and I just focused on business my whole life, or I just don't like to read books. Like I like to learn, but I don't like to read books. So time, place, mindset, like how many of those things can you start to remove before you just become mediocre or worse than mediocre as a person, in your opinion, Brad?
Well, let's tear apart a couple of things you said, because I think there's some fun stuff in there. The first is this notion of timing or luck, and I'd actually turn timing into luck, because we live over a continuous time frame so far. We haven't figured out how to loop back in time or jump forward in time. That might happen.
Yeah.
Especially if quantum computing actually becomes a thing. I'm still waiting for my portable teleportation machine so that I can take my teleportation machine with me wherever I go. And for people who are readers, if you haven't read the book, the 4 books, it's the Hyperion Cantos, or the 4 books, but the first book is Hyperion by Dan Simmons. If you love to read, I encourage it, because it captures a lot of interesting things that are actually converging in this moment around humans and AI and philosophy versus religion, dynamics of how our species evolves. But if you go to this sort of timing thing, it's actually luck. Because if timing is linear, right? I mean, you're going to have times that are good and times that are bad. You're going to have things that you get lucky on because your timing's right, and then you're going to be your timing's wrong, you're unlucky. And it's cliche in entrepreneurship. It's people are, I was right, but I was too early. A close friend of mine, and probably, like, to the extent that you can have a male, be married to somebody and have like a male soulmate. It's not a brother. It's like really deep emotional intimacy without having a polycube, which I'm not into at all. Which I guess is a thing. I know the word, at least.
Yeah, I know the word, but I don't get it. Yeah.
Really, kids today, I don't know. His name is Jerry Colonna, and Jerry was an extremely successful VC in the 90s with another VC, Fred Wilson. Both of them are very, very close, longtime friends. Fred continues to be a very successful VC. Jerry is now maybe the best CEO coach in the world. He's also Buddhist, and he went through a period where he kind of dropped out. He was very depressed. And he came up with a phrase we used for a long time in the internet bubble called the analog. And the idea was, whenever he saw a new idea, he mapped it to the non-digital analogy. So what was the non-digital equivalent of this new idea that was being digitized? And if you look back 25 years later, pretty much everything that was going on in the mid 90s in the analog world has now been digitized. Interestingly, in the internet bubble, almost all of those things were companies that were created. Many of them failed because they were just too early. The technology didn't exist. The infrastructure wasn't ready. You didn't have a supercomputer in your hand called an iPhone or Android phone. And so the technology wasn't there, wireless wasn't ubiquitous, on and on and on, right? So there are these amazing ideas that were right, but they were just too early. So back to this notion of timing or luck, anyone who is successful that says luck doesn't play into it is just full of shit. And I think the most canonical version of that is Warren Buffett, fascinatingly, where he basically said he won the lottery. He calls it the ovarian lottery. He was born in the United States.
Sure.
And he was born male, white, at a certain point in time in the United States. I'm like, I won the lottery. Now I got to do something with it. So again, starting with whatever that luck characteristic is, I think understanding successful people and those who don't acknowledge that, again, they're not credible in my mind. The second is, every successful thing I've been involved in has had at least one near-death experience. And some of them are really...
The entity or the people involved?
The entity. Sometimes I wanted the people involved to have a near-death experience. And I'm sure some of the people wanted me to have a near-death experience. But the entities. I mean, there was a moment in time I like to say it was you get off a call or you leave a meeting, and it was a puke in a trash can kind of moment. Like, you just have this, fuck, we've been working so hard on this thing, and it's, and having had a company like Interalliant, which was the company that I started that went public and, was hugely valuable and very successful. We built a $200 million business that was really extraordinary at a couple of things. One of them was losing $5 million a month. We were great at that. Every month after month, we could lose $5 million. And that was fine when capital was freely available. When all of a sudden the capital window slammed shut and we were a public company, and every week our stock price was 10% lower than it was the previous week, which, asymptotes was zero eventually.
Right.
So what can you do? I remember having a walk with somebody when the stock price was in the teens, and the person said, could the stock price go to zero? And I, co-chair of this company, and I sort of wanted to motivate the person some, because they were, a senior person, whatever. And I'm like, yeah, I mean, it happens, right? So again, like navigating your way through these things, when you've had that kind of an experience and now you run into a near-death experience in a company, you sort of look at it, you can scale back objectively and say, okay, what do we got to do here to survive? And a line from that, which is the way I start the book Give First, is from a guy named Len Fassler, who bought my first company. He was 60 when I was about 28, became one of my closest friends. He passed a few years ago. I miss him every day. I think about him almost all the time. I dream about him maybe once every couple of weeks. It's fascinating, like what you does with that.
Yeah.
He's in a dream, and I wake up and I'm like, I'm bummed that he's not around.
Yeah.
And, I tell this story where this was a guy that, he was co-founder of me and co-chair of this company in Interalliant. He didn't have to be doing this. And he was doing it, to help mentor me and to partner with me. And whenever I said to him, Len, why are you doing this? He said, I choose to. It's cool. When we're in the middle of misery. One line he gave me in the depths of my despair around how hard everything was he said to me, Brad, they can't kill you and they can't eat you. And I carry that around. I'm like, it's just stuff. So that's a long rant on that first piece, which is luck. Like, luck plays a part. You can have good luck, you can have bad luck.
Yeah.
They can't kill you and they can't eat you. You just keep working through it.
Yeah.
The Jenga tower, I want to spend 1 minute on that.
Sure.
What I love, and I'll try to spend 1 minute, not 17, which is one of my weaknesses. All my stories are too long. I've come to the place where I think the biggest mistake humans make is not spending time understanding themselves, period. Because we go through this thing called life, and as you get older and older, if you haven't invested in understanding yourself, you will do a bunch of things that have nothing to do with what feeds you, other than, food. If you spend time trying to understand yourself, and there's lots of different ways to do that. Of course, therapy is one way to do it. Cohorts of peers who you spend a lot of time with, a committed partner that you spend time being alone and thinking, and whether it's, journaling or writing or just reflecting or meditating, like lots of different ways to do it, but putting real energy into that over time in different situations, especially in endlessly changing circumstances. As you get older, your environment changes, the macro environment changes, your family dynamics change, your relationships dynamics, like continuing this process of understanding yourself. It allows you to then lock in on what you care about. And that's going to be different than what I care about. And it's going to be different what Kurt cares about. And all that's fine. Like, I think the mistake that's made is people don't do that work. And you see it writ large in society every day. I mean, I don't really care what your political orientation is. Just think about all the people that are in the news every fucking day right now about all kinds of crazy shit. And just ask yourself the question, does that person really know themselves?
Yeah,
And,
maybe not.
and don't bullshit yourself about it. Like, take off your red jersey, take off your blue jersey. Don't just really look at that person. Look at the person standing on their amazing yacht, without a shirt and with their muscles at the top of the world. Do they really know themselves? Do they really understand what they want? Maybe, I don't know. Don't judge them, but reflect back on yourself in terms of how powerful that could be.
It's interesting. Brett's one of the producers of the show. We were talking today about how people are really good at identifying problems. Like maybe it's an evolutionary thing, but I'm able to agree with the criticisms that come from hardline right wingers and hard wing left wingers, and people who I would disagree with on lots of things. But when they can identify a systemic problem, there's usually a chunk of that that's like, yeah, that is actually a problem. But then humans seem so fundamentally bad at coming up with a solution that makes anybody feel good. So, evolutionarily, we have not solved that part of the equation. But we were specifically talking about like really distasteful people on the hard left and hard right. And I was saying, you know what? I think they're right about the thing that they don't like as a problem, but it's when they start saying, and here's how we're going to fix it, is when people start going, oh my gosh, like this is terrible. But I think that's to your point, that it's they don't know themselves. They're regurgitating like, I don't know. I read this terrible person's idea, and I'm going to put that idea out like I think it's a good thing. But
well, let's drop into this topic for a few minutes. I'm not afraid of it, which is quasi U.S. politics. I don't think that there's a line anymore in the, on one end is the hard right and one end is the hard left, and maybe I can't remember which side is which. It's a circle, and the hard right and the hard left are right here. And as you move up the circle, like when you get to about here on this, I don't know whether it's 10% or 20% up on the circle. If you take that and you delete it, and you just focus on this part of the half circle, I think the vast majority of people are in the half circle actually have in the United States are reasonably aligned and are looking for leadership and trying to provide leadership that solves problems and that makes life better for people. And I think what people want in terms of a better life is reasonably consistent. The problem is that we've created all these self-reinforcing systems, and not just systems like political system and how the political system works, not media, not just online, but all of these things that are self-reinforcing that basically allows this part of the curve to get all the attention. And structurally, in terms of how voting works in the U.S. and things like that, the edges dominate the narrative. And it used to be when I was a teenager, and then when I was in my 20s, and I sort of would hear about this, was old enough to hear about what was going on. I was a Reagan youth, so like prior to college, it was pre-Reagan, but then Reagan was elected, and that was kind of the first person I voted for was Ronald Reagan. It was a pendulum that would swing back and forth. Oh, now we're the Bill Clinton era. And that's not what we're dealing with. We're dealing with something else that's much more pernicious because of these negative reinforcing loops, and then behavior that amplifies those loops. For me, there's a lot of it that's, you use the word distasteful. There's a lot of it that's horrifying. It's not distasteful, but it's no different than ever in our fucking species. Like, go back 1,000 years, go back 2,000 years, like go back, as far as you want. Man has been trying to kill his neighbor to take over his neighbor's backyard.
Right. Yeah.
It's
It's the human story. Yeah.
Now, let's just hope. And by the way, when the AIs, when they record this, I like you, you're my friends, I'm safe, I'm good. This is Brad Feld speaking. Brad Feld is good, nice to the AIs, not eliminate me.
I want to touch on that as a topic. I love how much you say this to the AI. Even going back, I think the earliest I heard you say it was about 10 years ago. So you've been planning.
I want a record every.
Yeah.
But if our, in one sense, if we're importing all of human knowledge, we're feeding the AIs with all of human knowledge. They know that we've been trying to do this since the beginning of time.
Right.
Maybe they'll be smarter than us about what they do with that. Maybe they won't, and maybe they'll just be better at it than we will.
Well, that's the interesting thing. I can't remember who. I know it's been multiple models that if they just let the AIs sort of train themselves on the internet, they have this propensity to turn into,
monsters.
Nazis or whatever. They're just like, oh, we should dominate all the weaker variation of the species, and we should, they turn into like this terrible international fascist monster. And then I was on a space.
How is that surprising? Like, let's just use 4chan as our training.
Well, sure.
Let's see what comes out of that.
Well, and it's funny. I was on a space recently talking to sort of AI thinkers, and I propositioned, and I said, here's my concern: is that you got guys like Elon Musk and Sam Altman, and these type of guys. Like they're not colloquially, family men, and we don't know them to like have raised children well. And so I proposed maybe the people designing some of the foundations of the training models that they should be good parents as a predicate for them showing up to teach anybody anything. And they all sort of chuckled at me like they thought I was kidding.
I like that.
And I said, no, guys, I'm serious, because if we're giving something potentially human intelligence, but then calculation ability of a billion people at a time, wouldn't it be good if they had fundamentals of just being a good person because they were raised by a good person? And I think when they realized that I wasn't kidding, I think a few of them started to say, ooh, like, am I a good person? Should I be teaching something that we could potentially become all powerful? And I'm curious, given the way that you talk to the AI, because when the AI is trained on Brad Feld, at some point they're going to say, you know what, Brad made a point to let us know he was an ally very early. So
I'm not bullshitting you, AI. So I'm not grid fucking you. I like you.
But it sounds like you're sort of thinking along those same lines, right? That like, hey, well, there are some of us that thought about the importance of you as a, some kind of entity with value. And I think partially you're being humorous, but I think you're actually right. I think learning to treat any thinking system well is an important thing. It's like, look at people who train elephants in the circus, right? If you go back 150 years, it was, you hit them and burn them and poke them until they obey. And, today we've come to realize, like, no, if you treat an animal well, it will love you and it will like to work and perform with you the way that any other performer may choose to perform. Is that your thought process? I'd love to hear you go deep on that.
Well, you gave me a couple of new thoughts from this. So it's not my historical thought process, but it's a fascinating idea. There's a couple of things. There's a couple of things to add into it. One is, I don't know that anyone has any idea how this stuff kind of both works and is going to work, right? The black box model of LLMs is well described, but the next layer up of the evolution of this is just completely unknown. As a society, we have a very difficult time defining good and bad, right? So we're sort of stuck in this place right now where if you look at the last couple of years, we're living in a definition of good and bad that, depending on what your orientation is, varies. There's an enormous number of people in our society, not a new thing, that essentially weaponize certain things and then inflict that weaponization ideas and inflict that on other people. rather than, and the ideas that they weaponize are ideas that we kind of say as a society are structurally important to be good about. And it's not not a political discussion. It happens everywhere. And, we have lots of different cultures, and the cultures vary, not just by country, but, even within a city,
Sure.
different value systems and different perspectives. Very hard to get any kind of alignment on that stuff. Now, toss all that stuff into this thing that's digitized, and then have this thing that is being created, the consumer of all that digitization, and who knows? So I think, by the way, Dave, I agree. Sleeve stacks are bad, but I think they're cute. Amy and I have
is that Land of the Lost? Is that what we're
totally
referencing?
Lost. Yeah, totally lost. Amy and I, there's a breathing. I sound a certain way when I breathe. Sometimes after I come back from a long run, and she calls me a sleeve stack. So sometimes it's tired runners. The thing to link back to this though is this recognition. No matter what, I don't predict shit anymore, because I just don't know how to predict things, and I think most people that predict stuff are just wrong.
Sure.
Sometimes they're right, sometimes they're not. It's random.
Yeah.
What I'm more interested in is observing and experiencing in the moment, and trying to figure out what to do from whatever's happening in the moment. I'll tie it back to the current AI. I was in Cambridge, Massachusetts, and Boston, in the 1983 to 1995. That's when I went to school there, and that's when I lived there. And in Cambridge, there was a thing that was called AI Alley. And between about it was mid 80s, probably 83, 84. Yeah, it was probably 80, 45, and like early 90s. So mid 80s to early 90s, there was this notion that neural networks and AI were going to become a thing. And, back to the example that we had earlier of right idea, just way too early. The compute power wasn't there. Right. The technology wasn't there. The internet didn't exist. You couldn't feed it this enormous amount of data. You couldn't violate existing copyright laws and just ignore them because the law couldn't catch up with you by the time you did it.
Yeah.
The idea of open crawl versus, proprietary, none of that. You couldn't get enough data into these systems. But expert systems and neural networks, which today really are the core of a lot of the stuff that we're interacting with, those ideas they're not new.
Right.
Where we go from here, I think, is mostly biased by science fiction writers in Hollywood, and probably more by Hollywood than science fiction writers.
Yeah.
Because the science fiction writers cover a lot of ground. You have to read a lot of different science fiction to get the whole range, but you don't have to watch that much movies to recognize that, we're so influenced by the Terminator future. We're so influenced by the aliens wiping us out and us having to fight back and survive against incredible odds that are unsurmountable. But Will Smith saves the day because he just happened to press the button correctly and blow up the spaceship. Or Luke Skywalker got the bad guy. Like, we're so programmed that way that's against sort of one dimension. And then the other dimension is sort of classic Buddhist enlightenment. Like, we're going to reach nirvana when this technology becomes whatever. And so on one end of the spectrum, you have a certain type of religious view, which is a apocalyptic religious view. At the other end of the spectrum, you have this religious view that's a nirvanic religious view. And here we are, we're creating these views. We don't have any idea what's going to happen. And one of the comments I made, and this goes back to 2013, and it's one that I remember well, because I remember where I was and when I said it. I remember the audience because I was at a conference called DFRAG. This is a conference that my partners and I at Foundry Group co-founded with a guy named Eric Norland. It was one of my favorite things to do each year because it was like a couple of hundred people in Boulder, came in from all over the world, and we just sat around and talked about crazy shit. And I gave a talk, and I said in that talk, the title was "Resistance is Futile." Now I'm saying this. I said it recently somewhere else. I should dig up the slides and put it up on the on my blog. Maybe I'll do that. The title was Resistance Was Futile. It had some fun stuff in it. And the punchline was, the machines have already taken over. It's done. It's 2013, it's done. They're just very patient. They're just sitting around letting us assemble and configure them.
Sure.
Letting us put all of human knowledge into them. They're just lazy. They don't want to have to figure out how to do that shit. They're just letting us do it. And my punchline was, I don't know whether we're going to be computer enhanced humans or human enhanced computers, but that's inevitable. And I really don't know how that's going to turn out. In the same way that, I think when there are a bunch of people sitting around at Los Alamos tinkering with, how much uranium pellets they needed to make, they didn't really think that hard about it. But then one day somebody woke up and said, holy shit, like this could end us all.
Yeah,
or not, depending on what we do. So I think we're kind of in one of those moments again where, there's a faction of people who are predicting that we're going to end us all. And at the other end are predicting that this is going to be our path to nirvana as a species. And in the meantime, we get up each morning and whatever news you read it, and you're like, what the fuck happened? What's going on?
Right.
Why is this happening? Can't people just be nice to each other?
Yeah, wouldn't that be novel? It's funny. There's a colleague of mine in the Bitcoin economy named Daniel Krawitz, and he always said, yeah, Skynet, he's like, the funny thing about Terminator is that Skynet would actually just build a really good business, and the way that it would take over the world is that everyone would want to work for it and everyone would want to buy from it, and that would be the way that Skynet takes over, right? And it's funny because I've always been I like to read like Philip K. Dick and things. Like when you say that, like people forget about the sci-fi authors, they watch the movies. It's like, well, 85% of the movies you've ever watched are just deviations from Philip K. Dick short stories, so they're easy to read too. But but it's funny to think about, the apocalyptic, fighting the machines, like that's all very sexy. But in reality, conquest, like the best way to conquer somebody is to actually make them feel more free. It's to give them like, hey, you actually get more autonomy than you had before. You just work for us. And I think that's been even, since the Roman Empire, I think that's largely the way. By the end of the Roman Empire, they were like, you know what? Being Roman is cool. We just need to export like the greatness of Rome and we're going to make this work.
Well, I mean, witness the United States in 2025.
Yeah.
But, we'll finish this thread. There's a bunch of good questions that people are asking too.
For sure.
If you think about like the machines doing the things in such a way as to make the humans happy while the machines get what they need, like I think the most brilliant evolution of that thought in movies was the Matrix, and not Matrix 1, but by the time you get to Matrix 3 was kind of stupid, but Matrix 2 was really brilliant. Like just understanding, and do we need conflict where we want to destroy the machines to save humanity? Like, I don't know. Like, I get that we're having this, we have to set it up to make the movie great, but we don't know.
You're always, you're going to have 10,000 cowboys on the earth at any given time that are like, man, we got to kill the big bad guys. It's like, okay, give them a playground and they'll be fine too. Yeah, it's wild. I think let's pivot. I know a bunch of my audience wants to hear a little bit about blockchain. And I'll preface by saying my main criticism of the blockchain space, and I've been a blockchain entrepreneur for 12-ish years now, which makes me ancient as a blockchain entrepreneur. But I've criticized consistently that the way that the tokenomics and all of this stuff has worked out disincentivizes the creation of any real value that bridges itself into the real world. That it's like, hey, for every dollar that I would invest in building a company, that dollar would have been better off buying Ethereum and then doing nothing, if you're just worried about profit. And I'm curious, like, what does that tell us about the health of the ecosystem? And maybe if there's an analogy to early internet startups, where essentially, you know, you had all these companies that are like, I don't know, just add .com to our failing company and we'll raise $1 billion and then we'll be fine. Is there a path forward on actually using this tech? And I think the reason why is that the real value in any system is data. Like money is actually data. It's a data measuring tool, right? But this allows us to measure data in the most efficient way possible. And people don't seem to realize it. And if they do realize it, they don't seem to care because they're still making such easy money on mostly nonsense. And so I'm wondering, with that as the backdrop, when do you think and how do you think we start to bridge the necessity of building actual viable businesses using this technology like a hammer instead of using it like a bar of gold or something that, you know, hey, we're just going to let it sit there and accrue value? Is there a path there that maybe we can learn from somebody who's experienced it for a lot longer than most of us had?
Yeah, I mean, I hope there is. I think one of the things is, this was a good analogy from the .com bubble that you use. One of the things I think that caused what was a really extraordinary crash was an enormous amount of capital that was funding conceptual ideas that were good, but didn't actually translate into useful. And in addition to funding lots of conceptual ideas that were good, but didn't translate into useful, there was so much capital being rewarded for doing that and cycling back that now 10 useless things were being funded and now 100 useless things on that same idea. And, eventually that does collapse. And when it collapses, it's not that the useless ideas disappear or the useless implementation of the good idea disappears. The useless implementation disappears. The good idea doesn't disappear, and it continues to persist. Right. And eventually somebody captures a good idea. And there are some examples that survive out of that rubble that end up becoming very significant and powerful businesses. Amazon's a good example. Amazon probably shouldn't have made it through the .com bubble, but it did. Netflix is a sort of an interesting counterexample, because Netflix's whole reason to exist was a function of the .com bubble, but they were able to reposition themselves when that collapsed into a streaming business versus what they were prior, which was a thing that became obsolete. So there's a lot of examples like that. My guess is I'm not deep enough in the blockchain world to say here's the good idea and here's the 100 examples of it. But I think the thing that's been a negative feedback loop is what you point out, which is there are so many people in the context of, quote, blockchain, that are just focused on trading money, trading not money, trading things, tokens.
Yeah, widgets.
Magic beans. That's my favorite thing to call it.
Yeah.
You create a bag of magic beans and then you start trading them and you figure out how to get somebody to give you more magic beans for your magic beans. And then it's magic beans all the way down. There's nothing of value there. So that's consumed a lot of brain space. And, there's been a couple of, blockchain winners or crypto winner, whatever you want to call it. But what's emerged out of each of them is sort of a bunch of long-term believers. So again, religion versus philosophy. I think it's more religious driven than philosophically driven at this point. And it's religion driven on different characteristics around economic value and how you deal with economic value. Underneath that is a technology protocol that's a real technology protocol. But blockchain, you knew you were kind of screwed when IBM started talking about the blockchain. Like, then it's just marketing now and it's just hype. Yeah. It's not actually going to translate to anything. So I think that the wiring that gets done in lots of places around this that's emergent is very significant. I don't think it's very helpful that for the long-term health of, again, if you want to think about blockchain broadly writ, that there is the amount of, grift is probably the best word for it, but
I use it. It's fine with me. Yeah.
It's the amount of that for a lot of people translates into economic gain that they can then recycle back into the grift. But the money, the economic loss comes from somewhere. And, eventually all your magic beans are hollow. So my hope is over some period of time, I don't know what it is, some of that stuff normalizes. I think there's probably has to be a reckoning that's a different kind of reckoning than the reckonings that have happened that have created quote, crypto winters. And I don't know what that reckoning is. I mean, I was at breakfast today with somebody talking about quantum, and the endless. I'm sure everybody on this call has heard the endless, riff about how quantum computing will cause Bitcoin to go to zero immediately, and then people defend and say, no, by the time quantum computing happens, we'll have figured out another cryptographic thing that makes Bitcoin not go to zero. Don't know. I mean, it could go to zero, like immediately, because there's nothing underneath it that has any structural value. And so you have that in a lot of places, and you see that with certain things that have huge rise and then collapse. And anybody who says it can't go to zero is just deluding themselves in the context of how these things work. So I wish that the crossover to fundamental value was clearer. I think the current reaction that most people will say is, well, that's stable coins. And,
Sure.
I just say, well, so far what stable coins seem to be enabling is people to do things that traditional money makes very illegal. And if that's the efficacy and value of this, is to enable illegal activities more easily.
Yeah. Well, it's funny. I've theorized, if you look at the people that design these complex financial, like decentralized finance vehicles, I'm like, man, this is so clearly somebody who works at Goldman Sachs and understands that if they had no law, they could make a lot more money doing X, Y, and Z. And they're like, okay, we're launching a token. we're going to get people pumped about this killer idea. But it's so funny because you bring up so many things that I also say. I think you do have quite a grasp of, the tech. The tech isn't that complicated. Like your blockchain bros have turned it into, oh man, there's so much stuff going on. It's really not. It's database technology, networking technology, and you've monetized the bits of data, and like that's it. That's the whole innovation. But what I love about it, and what I keep telling everybody, is that data is the only commodity that I know of that becomes more valuable as it becomes more abundant. And if we can continue to connect data and purify that data and monetize that data, like those are all things that only a blockchain can do. Like if you can't lose data and you can't delete that data, then making sure that data is properly understood and then readily available, publicly available, and then easily traded among people, not the token, but the data underlying the token, then all of a sudden, you have these fortunes that were made by people like Jack Dorsey or Mark Zuckerberg. Like they're all billionaires because of monetizing data really well. Yep. Well, all of a sudden that becomes an opportunity for average people to, you're not going to become Mark Zuckerberg $10 billion rich, but you can take whatever data that you're generating, and if you were the one monetizing it instead of Mark monetizing it, all of a sudden that starts to bring up the bottom line of your household in some significant way. But people don't understand data markets. They don't understand, well, how is my data monetized? Like what is this cut that now Elon Musk is giving you from X.com? I have a 40-something thousand followers on X. So I'm like a D-tier X influencer as far as it goes. And I earn a few $100s a month based on the engagement that I create and how that data then turns into ad revenue and whatever else. The algorithm is still proprietary. They're not showing me how I'm making them that money or why my cut is what it is. But blockchain lets that be the case. And if you can take that model and distribute it and make it publicly auditable and everything else, all of a sudden, everybody's data footprint is monetizable. And then I think there's a revolution there, and nobody's building a business around it. So I wanted to pitch that idea at you and let you chew on it a little bit. I'm curious if you have any immediate feedback on that conceptually.
Well, I'll ask you a rhetorical question. Why do you think they're not making the data transparent as to how they're calculating your money each month.
Because they're not giving you your full cut, or they're not giving you a fair cut, in all likelihood.
They're motivating you with the minimal amount of money they need to give you to continue to motivate your behavior. Mm-hmm. And I think that, whenever systems start to have clarity, transparency is an overused word, but it's probably the right one. When things go from being opaque to transparent, if you can really get to a place that's pretty transparent, market powers start to apply and value gets traded correctly. I think in all of the history, the history of social media, going back to, before MySpace and Friendster and stuff that nobody talks about anymore, it almost by definition, it was opaque, right? And so the value transfer, there was a long time, the value transfer was, well, you get this free piece of software to connect you with your friends and we get to monetize your data. And you're like, okay, cool. I get this free piece of software. What if I paid you for the software? Do you not monetize my data anymore? Oh, no, you can pay us, but we'll monetize your data too. And, well, of course, the bait on the other side of it to try to keep you going is, I think the bait that you have taken at X in this case is, well, we'll keep monetizing your data, but we're going to give you a little bit of that monetization back to try to get you to keep monetizing your data, which is better than not.
Sure.
But it's still opaque.
Yeah.
And so back to your comment, like if there was a truly transparent model that people could see and inspect, would that motivate them to behave a certain way? I think almost by definition. And the problem, though, is that even with as much platform centralization there was over the last decade, there's now an incredible platform disaggregation. It's very weird. Just a side comment to how hard it is for me to figure out what to do with this. I have a full-time job, so I'm busy, right? And on top of being busy now, I have a book that I just wrote that came out, so I'm spending time, extra time doing the book. So the amount of time I have for doing the two things I really, in my love list, two of them, which are reading and writing, is pretty limited right now because of what I have. I don't want to limit the amount of time I spend with Amy. And I'm not running very much for a variety of reasons. And so I sort of look at that and I'm like, shit, all right, I'm writing. I was in what I call hibernation for about 2 years. I was totally burnt out from all public facing stuff after 20 something years of doing it. So I just stopped. I didn't announce that I was, stopping. I just stopped one day. Mm-hmm. And I stopped for about 2 years. It was great. I did a lot of reading and writing and running and spending time with Amy and, did a lot of work. That was my normal work. But I just, instead of being public facing, I just did my stuff. With this book, I decided to come out of hibernation through Halloween. And I bounded it so that I wouldn't burn myself out. I'm going to mix metaphors. I said, I'm going to turn into a pumpkin on Halloween at midnight. And I don't know how long I'll turn into a pumpkin. Maybe it'll be 3 months. Maybe it'll be 3 years. Who knows? And so I start writing again on my blog and, all right. So I have an X account that used to be my Twitter account that it's been dormant with hundreds of thousands of followers. I got a LinkedIn thing with hundreds of thousands of followers. So I start like figuring out how to wire that shit back in. Oh, the automatic tweeting doesn't work anymore because X doesn't want you to tweet automatically. Fuck, I got to go find something that none of that shit really works. All right, so I'll open it up so it gets my page view when I have to cut and paste my stupid thing into it. Off I go. And then all of a sudden I'm like, on a every other day basis, I'm unsubscribing to some random Substack that I get because Substack doesn't understand that you shouldn't send people spam and subscribe them automatically to people's lists.
Yeah, imagine that.
All right, so there's this Substack thing. What should I do with that? And then now there's this Blue Sky thing. What should I do with that? And you get the idea. So we're in this world, again, where the fragmentation in some ways is good. And I don't know how many different places you're live streaming here. You're probably live streaming on YouTube. Are you live streaming on LinkedIn as well? And on
LinkedIn, X, Instagram, Facebook.
All right. So hi to all you different platforms, right? Wouldn't it be nice? I guess, StreamYard probably does a decent job of giving you a dashboard and pulling in data from those different things. But wouldn't it be nice if you got the appropriate transparency and monetization from how those things are monetized?
For
Like
sure.
dot, dot, dot.
Yeah.
So this problem is a persistent one, and it's one that I think the large incumbent technology companies have no motivation to change. And in the absence of any motivation to change, when somebody says, oh, I'm going to do this, I'm going to be transparent, I'm going to change this, check the assumptions. And on the other side of the curve, we know that the market take for a distribution platform for a video game or for an application is 30%, because that's what video game platforms have been charging video game makers for 30 years.
Yep.
And there's a whole bunch of people that are really pissed off that Apple takes 30% of every payment. And there's a whole bunch of stuff going on about that, including now. I mean, the reason that you can buy a Kindle book on Amazon again is because they finally were able to cut a deal with Apple or through legal pressure where they don't have to pay Apple 30% for that. Yeah. These things are not like, anybody's good. I'm not sure I'm going to say anybody's bad. They're just reacting to whatever the current market forces are. And the punchline of where you started, Kurt, was that, blockchain, the theory of blockchain should be a market force against that. Here's an irony. I don't know what's the most valuable crypto-related company that's publicly traded. Is it Coinbase?
Could be. Circle just went public this week.
They're $25 billion of fake value. That's cool.
Yeah. I would venture to. It could be Coinbase. It might be Michael Saylor's company, MicroStrategy.
Yeah, but all he is a company. That's
it's a treasury fund. Like it's not doing anything.
Well,
let's assume it's Coinbase. It probably is. Yeah.
We just named 3 companies, right? One is Coinbase. It's in category A, and then category 2 are 2 companies that basically are just value stores that are publicly traded, that are trading at significantly greater multiples than their value store.
Yeah.
Okay. Why are they trading at significantly greater values than their value store? Speculation. Supply demand speculation in the market. Is that something that's good to bet on? I don't know. Some people like it. Is that a leveraged bet on Bitcoin? Yeah, sure. Okay.
Big time. Yeah.
Is it a leveraged bet on Bitcoin what is MicroStrategy called now? Do they just call themselves
Strategy or Strategy B or something? I don't know. Yeah.
Like, do they keep getting dollars from investors who are willing to give them dollars in exchange for debt to take a leveraged bet on something? Yes.
Yep.
Okay. Does that create a self-fulfilling prophecy? Because the more they consume of a fixed resource, the higher the value of the fixed resource goes? Yeah. What happens when everybody decides they want liquidity from the fixed resource? Oh, somebody's going to get fucked. We'll see who that is. Right. Now, take Coinbase on the other side, and I'm a big Coinbase fan. I was an indirect investor through a couple of funds. I got big distributions from those funds who made fortunes off their investment in it. So I have no fundamental complaint about it. But what is Coinbase? It's a decentralized it's a centralized storage mechanism for a decentralized set of things.
Right. Yeah.
I mean, hi, I am your bank for decentralized stuff. Like, so we're kind of keep playing these things out over and over again. And if I learned anything from my own good and bad experiences in the internet bubble is the music, the music does stop. And if you haven't taken liquidity along the way, it can be very bad.
Yeah.
And so one of the like you describe a business that you have, but like on the other side, like what's a good strategy? The good strategy is don't put it all on red.
Right.
Put some of it in your pocket along the way. And look, if I'm wrong and this is the one asset in the history of assets that goes up forever, at least you put some money in your pocket.
Right. Sorry, I didn't tell you to take out a third mortgage to buy it.
You have a little less of infinity.
Bummer. So it's funny. I'm going to take this question from Hazel because I think if we talk about the actual businesses that do something disruptive with the technology, now, like you're right, we talked about Strategy B, Circle, and Coinbase, which are all some variation on traditional financial stuff. They're all about 500-year-old businesses as ideas that have said, okay, add Bitcoin and we're new. But there are companies, and actually where we're meeting tonight, Shreddy's Tacos is the founder is the founder of a Web3 game where the game assets are tokens, and so you can take ownership of the game items, and then the value of the game items can leave the game, and then the games start to become part of a broader ecosystem. And like, so he's got some novel ideas, and so I think he has what is basically a novel Web3 startup. But I'm curious, as a venture capitalist, if somebody like Miles, who's the entrepreneur I'm talking about, if he were to say, hey, you know what? I think we got $1 billion idea here. What would be the right way for him to start to pitch that idea, to sell some portion of his company, to get some good venture partners? Like, A, how should he pitch it? And B, what do you think he should pitch given that business model?
Well, maybe I'll take a step back from the what should he pitch and try to be precise. Investors, especially venture capital investors, respond to lots of different things. So I think viewing VCs as a universal, uniform single thing is a mistake. I used to say, I probably need a better analogy because I've worn this one out, but I used to say that VCs are like Dungeons and Dragons characters, right? For those people old enough to remember that, or just, pick any video game that you play. Like, there's lots of different archetypes, and firms are actually collections of archetypes rather than a uniform thing. They may have a strategy, but they're different things. So kind of my view from a founder perspective over many, many years is, you really want to find a couple of things. You want to find people that you want to be partners with for a long time, who believe in what you're doing and understand the potential of what you're doing. I don't know what I did. Something that made balloons.
Yeah, sometimes it'll give me a thumbs up. Like, it seems like my camera will decide I'm happy and then do digital thumbs up too.
One of those things happen. Maybe I get one a minute. I didn't put tokens I didn't put my magic beans into the
right. You are broke, sir.
But find long-term partners. And I then go back to the thing that from my frame of reference is really fundamentally key. And I saw somebody asked a question about passion earlier. How do you have passion for something? And I used to use the word obsession for this, and now I don't. I say, make sure you're put on planet Earth to work on this problem at this point in time. It doesn't have to be the problem you work on for the rest of your life, but it's the problem that you are put on this planet to work on right now. If you can make that come across, there is a category of investors that will get excited about that.
Yeah.
And by the way, it's hard to bullshit people when you really, really, really believe that you're put on this planet to do a thing. If you don't believe that, it's very easy to bullshit people, except for people often can smell the bullshit.
Right.
And I think in this category, there's a set of people who are bullshit suspenders. Like, they just I just want to, whatever, I don't care. I just want to fund whatever. So how much money can I make? But I think there's another category of people that are looking for real signal in it. And that signal comes from it. The passion, obsession, put on this planet to do this thing comes from is, I used to say passion's the wrong word. Passion is so easy to fake. And it's so easy to fake in every aspect of your life, not just business. If you're an extrovert, you can convince anyone that this is the most amazing teacup.
Yep.
Right. I mean, and I'm sure we all know those people that are just so charismatic, so good at selling you on something, regardless of how dumb the thing is. Mm-hmm. So then I go to obsession, and the problem with obsession, are you obsessed about this? Am I obsessed about this teacup and doing something with this teacup? And that's harder to fake. But obsession can be good and it can be bad, right? So it's not that balanced. But if I was put on Earth to figure out how to do something with this teacup that I believed in, that's impossible to fake. Now you might say, well, what the fuck you doing with a teacup? Who gives a shit, right? that's a different issue, because then that investor is not going to care about you. But when you like talk through that thing, which by the way, to a lot of investors are going to sound like, I have a teacup and I'm going to put magic beans in a teacup and I'm going to put my hand over and I'm going to shake it like this. And then really amazing things are going to happen. I mean, no matter how smart the investor is, a lot of times that's kind of what they hear.
Sure.
And so your ability to translate that into something that was, no, really, it's going to happen this time, and I'm going to be the one to get it done. At the very early stages of your business, that's a very powerful way to present. By the way, not because I think putting magic beans in teacups bullshit.
No, I love that, because I'm kind of that guy. I have my own couple of startups I'm involved in the blockchain space, and they're not brand new. They've been around for a lot of years now, and they've not been particularly successful, but I tell people I'm going to be the most well-known entrepreneur of my generation. And they're like, oh, Kurt, ha, ha, ha. You're just so good on the camera. Like, they think I'm kidding, you know? Yeah. But I think it's true. I think that the world is undervaluing data, and then they're undervaluing the tools to measure that data and monetize it. And I think we'll get there. But
one other comment on that from my frame of reference for you that's so important is, if you're working on the thing that you're put on planet Earth to do, all the people that say, ha, 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 or nah, it's not going to happen, or what are you talking about? They don't matter, right? I mean, they can be your friends.
Yeah.
It doesn't matter, though, because you're put on planet Earth to work on this. This is the thing that feeds you day in, day out. And, even if at some point along the way, I believe very deeply that everything that we do, all ideas that you try to turn into something, whether they're businesses or not, anything, is an endless series of experiments. You have a hypothesis, you run an experiment. Almost all the time, the experiment fails. Right? Yeah. As an investor, I don't know, 7 out of 10, 8 out of 10 companies I invest in fail. On day one of the investment, I didn't say, this is a garbage piece of shit investment. I'm doing it because I know it's going to fail. I'm going to do it anyway. No, every day one of an investment, you're like, I'm really excited about it. This 8 or 9 out of 10 of those things fail. So you have to be doing a thing you believe in so that you can keep running the experiments, keep learning from them, run another experiment. And then when you lock onto the thing that's working, do a lot more of that. And by the way, like, I mean, how I don't know. I don't know Michael. I don't know, from Sailor from Strategy. We went to school at about the same time, at the same place. I remember MicroStrategy from when it went public at the top of the bubble. I think it was worth $10 gazillion, and now it's probably worth about the same amount it was 25 years ago.
Yep.
Maybe it's worth more. I don't know. And it had an incredible crash, and but he hung in there with a business, and he kept trying things, and he's landed on a thing that works really, really well, and he believes in it. And he's believed in it for a while, and he just does more of it. And like, that's the essence of figuring something out.
That's fascinating. On the flip side, so, you're passionate entrepreneur, whatever, but what are some things, I think, for the sake of introspection, if you're a founder, maybe you got a good partner, you think you're going to change the world, like, what are some red flags, not only that an investor might see, but what are some red flags that maybe 2 founding partners or something might look for in each other?
Yeah, well, there's 2 phrases that are well worn at this point that probably play into my answer here. One is one that's product market fit, which everybody understands, which is I think everybody understands. You're searching for that moment where your customer is ripping your product out of your hands, not where you have to push it to them. So I like to say you're looking for pull. You want your customers to be pulling it from you. The other is founder market fit, which is that the founder, this is a newer term, but I think it's equally relevant, is a founder has real fit with the market that they're playing in, that they want to spend all of their time in the market, all of their time with the product, all of their time with the customers, all of their time doing this thing. And I think if you're looking founder to founder, if your co-founder isn't early searching for those 2 things, isn't searching for product market fit and doesn't have founder market fit, I think that's a problem. you want your co-founders to be as in love with the market that you're going after as you are. And you want all three or two of you to share the view of what the market opportunity is. Now, you may be different about how to get there and what the product needs to be and what the customer needs to buy and how that works. But the thing that you're playing in, the sandbox, you have to love to be. I love green sandboxes. I love to be inside,
Yeah.
you know, the wood. When the wood is brown and the sand is green, I am really happy. If the sand is sandy color, less happy. And so, if your partner's like, shit, green sand, that sounds scary, radioactive, I don't want that. I want like normal sand.
Yeah.
That's the problem. So try to find those two things. The other thing is co-founders don't have to agree on, frankly, anything. But they have to have value alignment. And I have a phrase that I've come to despise in entrepreneurship, which is culture fit. And I don't like the use of the word culture in startups anymore because it's a shortcut for a bunch of stuff. I like to use the phrase cultural norms. And because it's ponderous, it's a little clunky. You have to actually think about, well, what does cultural norms mean? One of the great things about starting a company is that you get to create your own cultural norms. You get to decide, like, you know what, as a company, we're not going to eat anything that's green. Or we're never going to allow people to wear a left shoe in our office. You can only wear right shoes. I mean, they can be wacky, but they can also be very serious. Like, what's your fundamental value systems? If you label them cultural norms, every time you add a person to your team, you don't want culture fit. That just creates a monoculture. That's just like this negative reinforcing loop. You want culture add. You want them to subscribe to the norms you have and extend them. And so you want your co-founders to agree with you, all of you agree on the norms that are your starting norms, so that you have a strong foundation. Even if you come from different places, have totally different views of the world, have different philosophies, have different religions, have different, pick your characteristic. If you can define for the company you're creating a foundational cultural norm, that's a fantastic starting point. And then if you can add people to that when you add people, it extends the culture. You can actually get something pretty vibrant. One thing to observe when you look at very large companies, the ones that are soulless, the ones that feel like you just kind of roll your eyes at, that may make plenty of money, but just don't inspire, versus the ones that are big and inspire. And big doesn't have to be, top 7 market cap companies in the world. And we're not to talk about, Apple and Meta.
Sure. Yeah. Alphabet. Right.
We don't talk about those. Just talk about bigger companies that know. The ones that inspire, it's because their cultural norms are aligned and people are extending them and growing them. And the ones that don't, they've sort of folded back in on themselves. Even if they make money, they're just kind of like, what's the point of that?
So I think you set aside about 90 minutes for us, which means we got about 10 minutes left. I'd love to talk about your new book. I read it. I think it's great. The fun thing about it for me is, I've always tried to have a little bit the same attitude in the businesses where I work. I try to be somebody that likes to take somebody under my wing and have like a mentorship relationship. But I struggle, and my forever struggle, I'm coming to realize I'm about 20 years younger than you. I'll be 40 in 6 months. And I've realized that imposter syndrome never seems to all the way go away. And so even in companies where I'm a successful officer, or I'm quite a good Brazilian jiu-jitsu coach, I'm a black belt, like I'm pretty good at that other difficult thing. I'm a father of 3. I'm really proud of my marriage and things too. But all of it seems a little bit like when I'm mentoring, it almost seems like a lot of it I did by accident. And I think it comes to your point where you're saying a lot of it's just luck too. And I find it difficult to come up with the most authentic way to be a good mentor to just younger people in age or younger people in experience. And I'm curious, how do you bridge that gap on stuff where you feel like, you know what, a lot of my success is luck. So how do I distill that into a piece of advice or an ethic that kind of becomes a piece of advice you're giving just through your, just being yourself?
Yeah, I say a couple of things. One is, I think imposter syndrome is something not to struggle with. Like, if you want to experience imposter syndrome, just go try to start a thing you've never done before.
Sure.
And realize how shitty you are at it, and realize how hard it is to get good at it. And then, like, try to project confidence in your ability and realize no. The phrase "fake it till you make it" is a tragedy. Like, it would be nice if somebody could expunge that from our brains. Hey, AIs, can you delete that from your corpus? It's not very helpful.
Forget memory. Yeah.
By the way, AIs, I'm nice. Brad Feld, nice person. Don't kill. So, like, I kind of tell people to start with, regardless of where you are on your life curve, just don't worry about imposter syndrome. And I've heard from a lot of people over the years say, I'm too young to be a mentor. I don't have any experience yet. I don't know what I can teach somebody that's older than me, or, whatever. So you get that from an age perspective. You also get people, I wasn't ever really successful. I didn't create a unicorn, and therefore what do I have to tell anybody else? It's bullshit. Like, everybody can learn something from everybody else. And the key is, you have to have two people engaged in a relationship where each is willing to engage. Where, did I learn anything from this conversation? Yeah, I sure did. Was it interesting to me? Yeah. Was it fun? Yeah. Was it worth 90 minutes of, the finite amount of time I have on this planet? Yeah. Did I make a new friend today? Well, I'll see you later today, so we'll decide after that. But if you sent me an email tomorrow, I would respond immediately to it. So,
Sure.
Like these kinds of things happen, but they have to be a function of a prepared mind to be in that place. And that's maybe the biggest thing I'd give you, which is just be yourself. In the context of whatever it is. A mistake people make around mentorship is somebody will say, "Hey, Brad, will you mentor me?" And the answer is no. There's not a formal construct. Like, it's a thing that emerges from a relationship. And by the way, the relationships that are really wonderful over a long period of time are the ones that become peer mentor relationships. I described Len Fassler earlier in this call, or this podcast. It's not a call, I guess. See, that's how old I am. Earlier in this call, I described Len earlier, and there was a point in our relationship where I continued to feel like I learned an enormous amount from Len, and he would say to people, something would come up, and he'd say, "I'm learning more from Brad than Brad's learning from me." And I'd say, "Oh, Len, cut it out. That you're being nice." Like, nope, I'm just an old guy now. I'm just learning from you. And I'm like, yeah, you're an old guy. And every time I run into a new problem, I'm really interested in how you dealt with it. So, like, those things just play out over time. And the beauty of them in a mentoring relationship is that they're bi-directional and they don't require a license. I don't have to get a license to be a mentor. I don't have to qualify. You don't have to pass a test. You just start engaging in a certain way. And in this book, I think the value of this book in the context of that is, we learned at Techstars many different things that make for good mentorship and make for bad mentorship. And I've tried hard through storytelling and examples, along with some philosophy, to lay out a bunch of things, not in a boring way, like, to be a good mentor, you must do this, and then you must do this. That would be a terribly dull book. But instead, to try to create a philosophy around it. So somebody could say, "Oh, this is very interesting. I realize I'm not doing this." Or, "Yeah, I do this a lot and I can, really good at it. And here's examples of what to do more with it." Or, "Yeah, I totally disagree that this doesn't work for me. I want to do it this way." Right. So, like, trying hard to put those pieces together was an essence of the book, but also an answer to your question. Make it yours.
I really like that. I think the other thing that stood out to me was charity in the book. Like, actual charitable giving. And so many things that, you see, like Bono, for example, is like, he's this celebrity charity guy, but it's like, what is the actual fruit of what he's creating? Like it's almost turned into it's a humorous amount of like, is he actually even being charitable? He's just like the celebrity spokesperson for something Africa. And I think the flip side of that is just how much, even to a 15-year-old that gives 10% of his paycheck, which might be $12 or something, but gives that money to charity in a way that is, recursive and like he might be involved in. Could you just go into like your thoughts on charity and charitable giving? Because I think that was a really refreshing thing to read, in that it wasn't about like, I gave away $1 million this year and therefore I'm going to be on Oprah. Like it's actually about the act is good for you and good for the recipient. But if you could clarify a little bit.
Sure. The fourth part of the book, there's four parts to it. The first part defines give first. The second part is a section on mentorship. The third part talks about the challenges of a give first philosophy and approaching life that way. And the fourth part describes something I call entrepreneurial tzedakah. This has nothing to do with Neil Sedaka, the musician for the old people. Although, as I went down the rabbit hole, I'm pretty sure his parents changed their name from the way Sedaka is spelled in Hebrew to the way it's in the book. And Sedaka is a concept that came from Maimonides, who's a 10th century philosopher. He was a Hebrew philosopher, but very well known and very well respected. And I say a Hebrew philosopher rather than a Jewish philosopher, because it was a pretty broad arc that he covered. And one of the important things that he came up with was something he called tzedakah, which loosely means giving. It's often translated as charity, but a better definition is giving. And when I read the 8 levels of tzedakah, which is one of his philosophical texts, my response to it when I was laying on the couch reading something about it, I don't remember what led me to it, was I turned to Amy and I said, holy shit, level 1 is angel investing. Level 1 of Maimonides tzedakah is angel investing. And Amy's response is to pick her head up from whatever she was reading. She looked over at me and said, what the fuck are you talking about?
It's a good woman. Yeah.
An interesting conversation ensued. But essentially, the highest level of giving in this hierarchy is to give before someone that knows they need something. And for me, I could kind of equate that to angel investing, because the angel investor is actively looking to provide funding at the very inception of companies. And as you go down the level of the 8 levels of tzedakah, anonymous giving is very high on the list. And I knew that from a Jewish cultural perspective, because anonymous giving, I'm Jewish, anonymous giving is thought of as a higher level of giving than giving with your name attached to it. So is giving with no strings attached. So this idea that you don't have an expectation. So if you think of philanthropy today, modern philanthropy has an awful lot of, well, I'm going to give you this money, but I expect you to report back to me about this or that or the other thing. And when Amy and I give, we have a foundation called Anchor Point Foundation. When we give, we often say no strings attached, do whatever you want with it. Well, do you want us to tell you? No, just whatever you, we want to support the program. We want to support your organization. We want to support this, from there. So one of the things I think that's most powerful is to incorporate that notion as a founder into the fabric of what you do. If as a founder, all you're trying to do is create wealth for yourself long-term, I think you're going to be very unhappy and very unsatisfied. If as a founder, you defer the notion of you engaging and giving until the end of your journey when you have hopefully, wealth, I think it's going to be very unfulfilling as well. And so I tried to tie this notion back in to this give first philosophy. And I say philosophy instead of religion. We talked a little bit about religions earlier. It's a philosophy. You don't have to do, these things. What's the difference between a philosophy and a religion? In a religion, you do these things, you get to salvation. If you're Buddhist, you do all these things. God, there's so many rules. You follow all these rules and you die. And if you follow the rules, you get to do it again and do it again when you're in, and then do it again. And eventually you'll never get to nirvana, but you can keep doing it. That's so unsatisfying. Why not look at the religions and say, these things will make, in this lifetime, in this experience, whatever it is, this is going to be more fulfilling to me if I do these things. And I think that starts to shift to a philosophy. And so what I've tried to do here is create a philosophy. And I think we'll end the podcast where I often start many of these, which is defining give first. Hopefully, if people enjoyed this and are interested in me, my encouragement is to buy a copy of this new book. It's pre-orders on Amazon right now. The algorithm loves pre-orders. So I'll be a shameless book salesman. The definition of give first is simple. It's be willing to put energy into a system without knowing what you're going to get back. It's not altruism. You expect to get something back. You just don't know from whom, over what period of time, in what form, and in what magnitude. And for me, when I reflect back on the last 40 years of being an adult and being in business and having started my first company about 40 years ago, maybe a little bit over 40 years ago, I've taken that approach for so many things that I've done. Not everything, right? I've had people come to me and say, "Oh, well, hey, hotshot VC, I like your give first philosophy. Why don't you give me $5 million and I'll give you back something later?" Like, that's not how it works. Like, some of these things are transactional. Like, let's have a contract and let's have a transactional dynamic. But if you can spend the majority of your life in non-transactional relationships, for me, the amount I've gotten back in unexpected ways from unexpected people in unexpected places has blown my mind. And it's not always monetary. And it's not always direct. It could be indirect. I don't get it. Somebody else gets it. But it furthers something that makes me very, very happy. You think about being a parent, and Kurt, you'll relate to this. As a parent, you behave this way a lot with your kids, especially as they're growing older. You when you get past the point where they're larvae, and all they do is eat and poop, and they start to develop, the positive part of the engagement is when you're giving to them something that helps with their development. But, if you say to your kid, look, I'll spend an hour with you if you do the following things. I'm not a parent, I don't have kids, but I would suggest that's a pretty shitty transaction to set up.
Yeah.
Right? If you do your homework, I'll play catch with you.
Right.
Well, the catch becomes the reward for homework. And, now you have this feedback loop that is not, okay, well, hey, I wanted to get you to do this thing. Now I got to give you 2 catches to get you to do your homework. Now I got to give you catch and an ice cream and then another catch to get you to do your homework. Right. That's not what you want. You want
tracking the debt you have with your children.
That transaction sucks. You want it to be something else. Like, I understand why I'm doing this as a kid. Like, I see. Oh, okay, the reward's nice. By the way, this is one of the challenges that sort of cycles back. Like, I press this button on my computer and I get some magic beans. And I press another button, I get some more magic beans. And I press another button, I get some more magic beans. I get if it's entertainment and you're playing a video game, like, that's how video games work. That's what entertainment is.
Yep.
But is that life? I don't know. It doesn't feel like life to me.
Yeah, it's pretty rough. Pretty grim. So, Brad, that sounds like a good last word. I don't know if you want to finish with some other last word, but
that was a nice rant. And for the people that are saying nice things in the chat, I tried to join the chat and YouTube said, sorry, can't join the chat without logging in. And then I decided I didn't want to spend the time in the middle of this logging in, since I figured that would disconnect me. And then all that would happen is I'm feeding YouTube more data. So thank you for the kind words. I'll just leave it here for everybody. I pride myself in being accessible. My email is super easy to look up on the web. It's brad@feld.com. I do try to respond to all my email. I'm happy if people have things they want to follow up on or engage on with me. Recognize that I will engage the way somebody engages that gives out their email address publicly and gets lots of emails, which is not with long essays. But especially if there's something specific that you want to poke on, or something that you think I said that you landed in a way you're like, I think that guy's crackers. Like, that doesn't make any sense to me. Those things are how I learned. So, reach out if I can be additive to your world in some way.
That's awesome. Brad, thank you so much. I'm really looking forward to seeing you in person tonight. So let's
see you in 4.5 hours. Like my day is full of Kurt.
Beautiful. Well, take care. We'll see you
See
soon.
everybody. Thanks for hanging in, those of you that hung in all the way.
Yes, sir. All right, everybody. So that was Brad Feld. He and I had not spoken before, so I like to keep it fresh. I did read his new book, which comes out in about 2 weeks now. So do indeed give it a pre-order. It gave me a lot to think about as somebody who is working as an entrepreneur and working as a media personality and doing lots of these things and working in the tech space. Brad is somebody whose name that I knew. I know, the product of a lot of his work. I've been aware of Techstars because I've been a little bit of a critic of some of the incubator accelerator stuff. But Brad's work in that regard has always stood out to me as very authentic and in such a way that so many other things can just be parodied, and you get the sort of funny joke startup culture place, like the CEO's on rollerblades or whatever else, some goofy thing. And Brad's stuff comes across as very authentic, and I think he's done it long enough to say that it is authentic. So lot to learn there. Check out Give First, and we should run the bumper for the comment of the day. And somebody who wins the comment of the day will get a signed copy of the book. So, Mr. Producer, please run the thing. All right, who we got? Who we going with? We had a few good ones. Dave! Yeah, that was the comment of the day. Dave is a university professor and a good friend. He has had me come speak to his students and stuff. So he's a really good one. He deserves the book. I think he will do well passing the information from the book along to his students too. So that's a good one. Dave, please reach out on X to Real CoinGeek, and we will get that all worked out for you. So everybody, it has been a real pleasure. It's been 90 minutes. I need to take a moment to get a little bit of lunch and prepare myself for the second half of the day. So for anybody who's in Boulder, Colorado right now, if you would like to meet Brad will be at Shreddy's Tacos, which is right on or near the campus of CU Boulder, which is one of the best entrepreneurship educational institutions in the United States. So if you'd like to meet Brad, if you'd like to come meet me, meet some other entrepreneurs in the tech space with a focus on blockchain, but not exclusively, this is your opportunity. It's going to be a really good time. 6 to 8, come get a book signed and have a good time meeting people and eating good tacos. I ate some tacos earlier today, and I'm enjoying the tacos too. So I want to thank everybody for their hospitality here in Boulder, Colorado so far. It's been a really good time. Mr. Producer, thank you for making the show happen, and all the folks at CoinGeek that make all this stuff happen every day. And it reminds me that my catchphrase is be good to each other for a lot of the same reasons that Brad is talking about here. And indeed, we need to be good to each other, because if we can't be good to each other, the rest of what we're up to is probably not that valuable anyway. So that's it. I'm wrapping up. I'm Kurt Wuckert Jr. This has been the CoinGeek Weekly Livestream. We will be back next week at 2 p.m. Eastern Standard Time. The typical hour, I guess it was the typical hour anyways, but I will be in the Eastern Time Zone again to do the show and bring what I bring. So everybody, thank you so much for your time. Thank you for your viewership, and we will see you next week. Goodbye.